Hi traders, you're welcome back to the Forex Geek channel. If you are struggling to find key price levels in the market, then you need to start using the Auto Fibonacci Retracement Indicator. Now, this tool takes the guesswork out of technical analysis and automatically identifies key support and resistance levels for you. Okay, so in this video I'll break down exactly how this indicator works and how you can use it effectively in your trading strategy. Now, before we dive into the Auto Fibonacci Retracement Indicator, let's just quickly go over what Fibonacci retracement actually is. I'm going to add the indicator to the chart as we're as we're doing that, as we are going over how what Fibonacci or what Fibonacci retracement levels are. Okay, this colors, I just need a color that is, yeah, I'm gonna use black. All right. So this tool is based on the Fibonacci sequence. It's a series of numbers that include 0, 1, 1, 2, 3, 5, 8, 13, 21, and so on. Okay, so when you divide these numbers with adjacent ones, you get the Fibonacci ratios: 23.6%, 38.2%, 50%, 61.8%, and 78.6%. All right. So these levels are important because they act as potential support and resistance zones where price may pause, reverse, or continue in the same direction. Now, what makes the Auto Fibonacci indicator special? Normally, when using the Fibonacci retracement tool, you have to manually select the highest and lowest points. When you are using the Fibonacci retracement indicator, the normal indicator, you actually have to manually select let me just show you an example. This is the Fibonacci retracement. So you have to manually select your high and your low, and then draw it. You have to drag it manually, for the indicator to plot the levels for you. Okay, but the Auto Fibonacci does that automatically. All right, it does it automatically. Okay, so when you are doing it manually, it can be time consuming and even inaccurate if you are not sure where to place them. But the Auto Fibonacci indicator, the Auto Fibonacci retracement indicator, does all of this automatically. It scans the chart, identifies the most relevant high and low points, and plots the Fibonacci levels for you, saving you time and eliminating errors. Okay, so now, just because this indicator is automated, it doesn't mean that you should use it blindly. All right, so here are some key tips to get the most out of this indicator. One is look for confluence. All right, when you are using this indicator, ensure that you always get a confluence. If a Fibonacci level aligns with a strong support or resistance zone, or maybe a trend line, for example, we can see we have a resistance zone of somewhere around here, right? We can see we have a support zone somewhere around here. We have a key level also somewhere around here. So if you get an alignment, or at least something close, yeah, it could also add as confirmation. For example, Fibonacci levels are usually used in trending markets. All right, they're used in trending markets, and when the indicator identifies these important levels for you, you just have to look out for confirmation patterns, in the direction of the trend. Okay, for example, okay, let's look at let's look at this example. The indicator has highlighted some important levels using this low and this high, right? You can see this low and this high. So it's identified this buy trend. Now we can see that these zones now are potential reversal zones. You see this 23.6, 38.6.2, 50%, 61.8%. There are possible reversal zones. So in a situation whereby maybe price comes down and probably get towards the zone, and then you notice some continuation patterns, it's a sign for you to watch out for a possible buy opportunity. Okay, so these zones are good opportunities to buy or to sell, depending on the trend. If it's a bullish trend, it's opportunities to buy in the direction of the trend, but make sure you get your confirmation first, okay? Because any of these levels could be the rejection point, any of them. Price could reverse here, price could reverse here, it could be here, it could be here. So just make sure that you get confirmation before you jump in, okay? Pay attention to the 61.8% and the 38.2% levels, because these are actually some of the most important levels where the price often bounces or reverses. So between 38.2% to 50% to 61.8%, within these zones, these are like, the zones where, prices are, most likely to to bounce. Okay, it doesn't mean that the other zones are invalid. No, that's not what it means. It's just that these zones are, like, will I say, the most important zones, okay, that you have to watch out for. All right, and then make sure you watch for price reactions. Instead of entering a trade immediately at a Fibonacci level, look for candlestick confirmation or volume spikes. Okay, so for that purpose, you can decide to just pay very, very close attention to candlestick patterns that occur around these zones. Okay, it's very important. And you can also decide to add a volume indicator to your chart if you just want to pay attention to volumes as well. All right, and then in addition to that, you can also combine with such indicators like RSI or maybe MACD or Bollinger Bands, just to help confirm whether the price is likely to respect a Fibonacci level. For example, if you're going to be combining with RSI, you can be watching out for when the RSI enters oversold territory and starts climbing back up. Maybe around that time coincides with when price gets to, let's say, maybe 38.2% or any other level, and then you notice a rejection candle. That could be a sign to enter a trade in the direction of the trend. Okay, so just make sure that you are paying attention to that. Okay, make sure that you're paying attention to that. All right. So the Auto Fibonacci Retracement Indicator it's actually an effective indicator. Now, one thing you are going to realize with this indicator is that the indicator plots the levels based on current price activity. So that's the reason why we can't exactly go back to go and check its performance in the past, because even if you decide to zoom out, you will notice that it's going to expand. The reason why it's expanding is because it is now using current price activity to plot the levels. So it's going to take the low and the high of the the low and the, how do I put it now? Do I say the lowest low and the highest high that can be seen on your screen? Okay, the lowest low and the highest high that is available on the screen is what it's going to use to plot the levels. Let's see, if we zoom out, you're going to see it's going to expand. It's going to expand. You can see it expanded to the highest high and the lowest low that can be seen on your screen. That is what it's used to plot the levels. So from here to here. So currently this is the retracement. So now we are watching out to know where this retracement is going to end, whether it's going to end at this, or whether it's going to end at this, or whether we're going to have a complete reversal. Okay, so just pay attention to that. That's how this indicator works. All right, so if you found this video helpful, smash that like button and subscribe for more powerful trading strategies. Also, drop a comment below. Do you use Fibonacci retracements in your trading? Let me know how you apply them. All right, thank you for watching, and I hope to see you in the next video.